I remember the exact moment I became a profitable trader. Want to know what I did? I closed my laptop, walked away, made zero trades, and felt like an absolute failure. It was March 2018. I'd been trading for 3 years. I was obsessed. I'd wake up at 4 a.m. for the London Open, trade through New York, and still be watching Asian markets before bed, 7 days a week. My identity was wrapped up in being active. If I wasn't in a trade, I wasn't a trader, right? Wrong. That single day of doing nothing taught me more than 1,000 trades ever could. And today, I'm going to share why the most powerful weapon in your trading arsenal isn't a strategy, an indicator, or a news feed. It's your ability to do absolutely nothing. Stay with me because by the end of this video, I'm going to challenge everything you think you know about what it means to be a serious trader. Introduction. Welcome back to the channel. If you're new here, I'm a full-time professional trader, and this channel is dedicated to the psychological side of trading that nobody talks about when they're showing you their P&L screenshots. I've been in the markets for over a decade, and I've blown accounts, rebuilt them, and finally found consistency. Not through some magic indicator or secret strategy, but through understanding my own mind. Today, we're diving deep into something that sounds completely counterintuitive: the power of no trade days. And I'm not just going to tell you why they matter. I'm going to walk you through my own journey of discovering this truth the hard way, give you 10 specific reasons why doing nothing can be your most profitable action. And by the end, I promise you'll look at your trading screen differently tomorrow morning. But first, let me take you back to that day in March, because that's where this story really begins. So there I was, March 15th, 2018. I'd had a brutal week. Monday, I'd entered a breakout trade that immediately reversed. Tuesday, I tried to recover and overtrade my way back to even. Wednesday, I forced 3 setups that barely qualified as C- opportunities. Thursday was more of the same. By Friday morning, I was down 8% for the week. Now here's the thing. I had rules, I had a trading plan. On paper, I was disciplined, but in practice, I was an addict. And my drug of choice was the dopamine hit of clicking that order button. Friday's market open, and I'm sitting there, hands on keyboard, eyes glued to the screen. I'm watching ES futures, some Forex pairs, scanning for anything that looks like it might move. And you know what was happening? Absolutely nothing of quality. The market was choppy, low volume. It was that classic mid-month drift where nothing makes sense and everything's just noise. But I couldn't see it, or I could see it, but I didn't want to accept it, because accepting it meant sitting on my hands. And sitting on my hands meant I wasn't working. I wasn't trading. I wasn't being the professional I'd told myself I was. My mouse hovered over an entry, EUR USD. It kind of, sort of, maybe looked like it might hold support. I had the order queued up, finger on the trigger, and then my phone rang. Turning point, it was my mentor, a guy who'd been trading for 25 years and had saved my career more than once. He didn't usually call during market hours unless something was up. "What are you doing?" he asked. Not hello, not how are you, just straight to it. "About to take a trade," I said, defensive already. "What's your setup?" I started explaining, and as the words came out of my mouth, I heard how weak it sounded. "Well, it's kind of near support, and momentum looks like it might shift, and..." He interrupted me. "Stop. What's your conviction level? 1 to 10? Silence, because I knew the answer, and he knew I knew. 4, I admitted. "Then why are you entering?" Another silence. Longer this time. "Because I've had a rough week. Because I feel like I need to make something back. Because I'm a trader and traders trade." I'll never forget what he said next. "No. Traders make decisions. And sometimes the best decision is deciding not to trade. You're not a trading machine. You're a capital allocator. And right now, the highest probability decision is to allocate zero capital." He paused, then added, "Close your platform, go for a walk. Come back Monday with fresh eyes. That's not giving up. That's being professional." And then he hung up. The shift. I sat there staring at my screen. Part of me was angry. Who was he to tell me to stop trading? I'm an adult. I make my own decisions. But another part of me, a quieter part, knew he was right. So I did something I'd never done before. I closed my platform. Not just minimized it, closed it, shut down my computer. And I walked away from a full trading day with hours still left before the close. It felt horrible, like I was quitting, like I was weak, like I'd failed. I went to a coffee shop and sat there with a journal, feeling sorry for myself. And then I started writing, not about trades I'd missed, but about what I was feeling, why it was so hard to sit out, why I felt like my identity was tied to being active in the market. And that's when it clicked. I wasn't trading to make money anymore, and I was trading to feel like a trader. The act had become more important than the outcome. I was addicted to the process, not focused on the result. That single day of doing nothing, of sitting with discomfort instead of medicating it with activity, changed my entire approach to the markets. Transition to teaching. Now, I know some of you watching this are nodding along. You felt this. That pull to do something, anything, even when deep down you know you shouldn't. And some of you are thinking, that's nice, but I need to be active to make money. I can't just sit around doing nothing. I get it, I was you. But here's what I've learned over the last 7 years since that day. The best traders I know, the ones consistently profitable year after year, have mastered something most people never learn. They've learned to be selectively aggressive. And selective means sometimes the answer is no. So let me break down the 10 specific reasons why no trade days are not just acceptable, but essential to long-term success. These aren't theories. These are principles I live by, and they've transformed not just my trading results, but my entire relationship with the markets. Number 1, discipline test. The best traders prove discipline not when they buy, but when they don't. Anyone can pull the trigger when they're excited. The real test is restraint. I'll tell you something that sounds harsh, but it's true. The market doesn't care about your need to trade. It doesn't care that you're bored, that you feel unproductive, or that you're down for the week. The market presents opportunities on its schedule, not yours. When I finally accepted this, everything changed. I stopped measuring my day by how many trades I took and started measuring it by how many quality decisions I made. And sometimes that quality decision was a flat day. A flat day isn't hesitation. It's not fear. It's pattern recognition telling you that your edge isn't present. That's strength. That's what separates professionals from gamblers. Gamblers need action. Professionals need edge. Think about a sniper. They don't fire continuously. They wait. They observe. They breathe. And when the moment is perfect, they take one shot. That's what we are. We're snipers, not machine gunners. Number 2, emotional reset. Sitting out helps you detach from FOMO. It clears emotional residue from previous trades and restores focus. Here's something I learned the hard way. Trades have emotional half-lives. You take a loss on Monday, and if you're not careful, you're still carrying that emotion into Wednesday's decisions. You're either trying to get revenge on the market or you're gun-shy and hesitating on good setups. No trade days are like hitting the reset button on your emotional operating system. They give you distance. They let you process what happened without immediately jumping into the next thing. I keep a strict rule now. If I'm feeling any strong emotion about my last trade, good or bad, I take a break before entering the next one. Sometimes that's an hour. Sometimes it's a whole day. Because here's the truth. FOMO is a liar. It tells you you're missing out, but what you're really missing out on is bad trades. Every time I've traded from FOMO, I've regretted it. Every single time. But every time I've honored my emotions and stepped back, I've thanked myself later. Your emotional state is part of your edge. If it's compromised, so is your trading. Protect it. Number 3, market clarity. When the market is choppy or extended, observation is more valuable than action. No entry equals no damage. I learned this during earnings seasons. Those weeks where 20 major companies report and the market's just whipping around on headlines. Used to, I'd try to trade through it. I'd tell myself I could navigate the chaos. I couldn't. Nobody can consistently. Now, when the market loses its structure, I lose my activity. I switch from participant to observer. And you know what I've noticed? I learn more in those observation periods than I do in smooth trending phases. Why? Because I'm watching with different eyes. I'm not trying to predict the next move. I'm studying how the market behaves under stress. I'm seeing which levels actually hold when tested. I'm noting which narratives move price and which ones get ignored. Think about it like this. Would you drive at full speed through dense fog? No. You'd slow down. You'd proceed with caution. Same principle here. When the market's unclear, the clearest decision is to wait for clarity. No entry means no damage, and in trading, not losing is half the battle. Number 4, pattern recognition. Watching without acting trains your eye. You start seeing structure and timing with more precision. This one's subtle, but powerful. When you're constantly in trades, you're operating from inside the game. But when you step back and watch without the pressure of having capital at risk, you see things differently. You notice patterns you miss when you're emotionally invested. You see the rhythm of how setups develop and fail. You start understanding timing at a deeper level. I'll give you a concrete example. I used to struggle with breakout trades. I'd enter too early or too late, almost never at the right spot. Then I spent 2 weeks just watching breakouts without trading them, just marking them on my chart, noting the price action, studying how they developed. That observation period taught me more than the previous 6 months of active trading. I started seeing the difference between true breakouts and fake ones. I noticed the volume patterns. I recognized the consolidation structures that preceded the best moves. Now I catch them. Not all of them, but the high-quality ones. And that skill came from patient observation, not frantic activity. Your eyes need training time just like your discipline does. Give them that time. Number 5, capital protection. Every unnecessary trade costs mental and financial capital. Waiting preserves both. Let's talk about something most trading education ignores. You have 2 types of capital. Financial capital, yes, but also mental and emotional capital. Your financial capital is obvious. Every trade you take has a cost. Commission, spread, slippage if you're in fast markets. But more importantly, risk. Every position you open puts money in danger. But here's what people don't talk about. Your mental capital is just as finite. Every decision you make drains it a little. Every chart you analyze, every entry you consider, every stop loss you worry about, it all adds up. By the end of a heavy trading day, you're mentally exhausted, and exhausted minds make bad decisions. They cut winners too early. They hold losers too long. They see patterns that aren't there. No trade days preserve both types of capital. Your account stays intact, your mind stays fresh. And tomorrow, when a real opportunity appears, you have the resources to take it properly. I think of my capital like ammunition. I've only got so many bullets. I'm not going to waste them shooting at shadows. I'm going to wait until I have a clear target. Number 6, system alignment. A no-trade day means your system is working. It filtered out noise. That's not inactivity. That's discipline in motion. Here's a mindset shift that changed everything for me. I stopped thinking of no-trade days as days where nothing happened. I started thinking of them as days where my system worked perfectly. See, if you have a solid trading system with clear rules and filters, most days shouldn't qualify. Most market conditions aren't optimal. Most setups don't meet all your criteria. That's not a bug, that's a feature. Your system is supposed to keep you out of low probability situations. That's literally its job. So when you go a whole day without a setup, that's not failure, that's a success. Your filters did what they were designed to do. They protected you from mediocrity. I used to feel guilty about flat days, now I celebrate them. Each one is proof that I'm not gambling, I'm not forcing. I'm executing a process, and sometimes that process says, not today. That's discipline in motion. That's your system working exactly as intended. Trust it. Number 7, strategic energy. Use downtime to prepare, journal, and scan new setups. Tomorrow's clarity depends on today's patience. No trade days aren't vacation days. They're preparation days. This is where professionals separate from amateurs. When I'm not actively trading, I'm actively preparing. I'm reviewing my journal, analyzing what's working and what's not. I'm updating my watch lists. I'm studying sectors and correlations. I'm doing the deep work that you can't do when you're managing active positions. I'll spend a no-trade day going through my previous trades, looking for patterns in my execution. Am I exiting too early consistently? Am I entering before my full criteria are met? What's my win rate on different setup types? This analysis makes me sharper for the next trade. It compounds my edge. I also use this time to scan for emerging opportunities. Maybe there's a stock setting up a beautiful consolidation that'll break next week. Maybe there's a sector showing relative strength I want to track. This forward-looking work positions me to move fast when the opportunity arrives. Tomorrow's clarity literally depends on today's patience. The work you do in the quiet moments determines your performance in the loud ones. Number 8, psychological control. Each skip setup reinforces self-trust. You're no longer chasing movement. You're mastering restraint. Every time you see a marginal setup and choose not to trade it, you're building psychological capital. You're proving to yourself that you can resist impulse, that you can defer gratification, that you're in control, not your emotions. This builds over time. The first few times you skip a trade, it feels terrible. You're watching the screen, second-guessing yourself. Maybe I should have taken it. Maybe I'm being too conservative. But after you do it 50 times, 100 times, something shifts. You start trusting your judgment. You stop second-guessing. You become comfortable with restraint. And here's the beautiful part, that psychological control transfers to other areas of your trading. It helps you hold winners longer because you're not anxiously looking to close and lock in profit. It helps you take proper position sizes because you're not emotionally charged and trying to make something happen. You're no longer chasing movement. You're mastering restraint, and restraint is power. It's the foundation of consistent profitability. Every skipped trade is a deposit in your psychological account. Make enough deposits, and you become unshakable. Number 9, long-term edge. Avoiding bad trades has the same compounding effect as finding good ones. Consistency is built in the quiet days. Let's talk about something mathematical for a second. Your long-term profitability isn't just about hitting winners. It's about avoiding losers. If you take 10 trades a month and 8 are winners, you're doing great. But if you take 20 trades a month and only 12 are winners, you might actually be worse off after commissions and the mental toll of managing more positions. The traders who last decades aren't the ones taking the most trades. They're the ones avoiding the most bad trades. Every trade you don't take that would have been a loser is money in your pocket. Every setup you skip that doesn't meet your criteria is a win, even though it doesn't show up on your P&L. This is about compounding, but not the way most people think. We always talk about compounding gains, but compounding works on the negative side too. Avoiding bad trades compounds just like making good ones. The quiet days, the patient days, the days where you do nothing, those are the days building your long-term edge. They're not exciting. They don't feel productive, but they're the foundation of consistency. Number 10, professional mindset. Pros don't measure productivity by trades taken, but by quality decisions made. Sometimes the best move is none at all. Let me end with this. The defining characteristic of professional traders versus amateur traders isn't their strategy, their capital, or their screen setup. It's their mindset about productivity. Amateurs measure productivity by activity. How many trades did I take? How many hours was I at my screen? How busy was I? Professionals measure productivity by decision quality. Did I execute my plan? Did I protect my capital? Did I wait for my edge? Some of my best trading days have been flat days. Days where I watched the market, recognized it wasn't setting up, and protected my capital. Those decisions made me more money than dozens of marginal trades ever could because they kept me in the game. You're not paid by the trade, and you're paid by the quality of your decisions over time. And sometimes, often actually, the highest quality decision is to do nothing at all. When you internalize this, everything changes. You stop feeling guilty about flat days. You stop forcing trades. You start respecting your process. You become a capital allocator, not an action junkie. That's the professional mindset. That's what separates the 5% who make it from the 95% who don't. Conclusion. So let me bring this full circle. Remember that day in March 2018 when my mentor called and told me to close my platform? That was the day I became a professional. Not because I made a great trade, but because I made the decision not to trade. Since then, I've had hundreds of no-trade days, maybe thousands. And I can tell you without exaggeration, those days have been just as responsible for my profitability as my best winning trades, maybe more. Because every day I chose patience over action, discipline over impulse, quality over quantity, I was building the foundation of long-term success. That's what I want for you. I want you to give yourself permission to do nothing when nothing is the right move. I want you to measure success by decision quality, not activity level. I want you to become comfortable with discomfort, with boredom, with silence. The market will always be here tomorrow. The opportunities will come. Your job isn't to chase every move. It's to be ready when your edge appears. So tomorrow, when you open your charts, ask yourself one question. Is my edge present today? And if the honest answer is no, close the platform. Go for a walk. Do your preparation work. Build your psychological capital. Because the best traders aren't the busiest. They're the most selective. They're the ones who understand that power comes from restraint, not action. Master the no-trade day, and you'll master trading itself. If this resonated with you, hit that like button. Subscribe if you want more content on trading psychology. Drop a comment and tell me, what's the hardest part about taking a no-trade day for you? Let's talk about it. Until next time, trade well and remember, sometimes the best trade is no trade at all.